Good day, and thank you for tuning in. I am Henry Lazenby, the Northern Miners multimedia producer. It's North America's oldest trusted source of mining news. Magna Mining is one of just a handful of nickel exploration and development stories listed in Canada, and yet still remains relatively unknown after their public listing in May 2021. We like to uncover just such new mining stories here at the Northern Miner. So we've published a joint venture article on the company back in September. But this is the first time we are hosting them on our video platform. So I'm delighted to welcome Paul Fowler today, Senior Vice President at Magna Mining. Welcome, Paul. It's a pleasure to have you here.
Yeah, absolutely. Thanks very much for having me, Henry.
All right. So for anyone who hasn't heard of Magna yet, which I suspect might be plenty of people, Paul, why don't we start with a quick overview of the company?
Yeah, absolutely. Thank you. So, in a nutshell, Magna is a Sudbury-based, nickel-focused development and exploration company, would be the best way of describing it. The flagship asset is the Shakespeare mine, which is a past-producing nickel and copper mine about 60 kilometers southwest of Sudbury. And I think somewhat uniquely for a junior, we have an existing 43-101 resource and the major permits for a 4,500 ton a day mine mill and tailing storage facility. And we intend to use these permits to put the mine back into production, obviously. Ultimately, what we're aiming to create is a new nickel producing company based in Sudbury using a hub and spoke production model with our Shakespeare asset at the epicenter. But Magna's not exclusively a development story. We're also hopeful that we can realize some significant near-term growth and upside through our exploration program, and that's because we control about 180 square kilometers of property surrounding Shakespeare, which is also adjacent, of course, to the world-renowned Sudbury Basin, which, as many people will know, is home to some of the richest nickel deposits ever discovered in Canada.
Yeah, absolutely. So I guess in an environment where the majors suddenly seem very keen on acquiring and developing new nickel assets to, of course, satisfy this rapidly growing demand for metal from the EV sector, that property package seems almost too good to be true. As you say, it's adjacent to the Sudbury Basin, permits are in place, you've got established resources. Could you give us some background as to just how the company managed to put this package together?
Yeah, absolutely. And that's a very good question. The key to the evolution of this company has really been, if it's one thing, it's the knowledge of Sudbury and the surrounding regions that the management and the board have. Many of the management team and indeed the board have decades of experience at companies like Inco and FNX, who were historically two of the most successful companies ever to operate in the Sudbury region. For example, our founder and CEO, Jason Jessup, led the mine operations at McCready West and Levac for FNX. Our chairman, Vern Baker, also worked in Sudbury as the VP of mine operations at FNX. Our vice president of exploration, Meneer Hoxha, spent over 10 years in Sudbury as a geologist for FNX and is credited with several discoveries in the region. And many people would recognize some of the names on our advisory board, like Gordon Morrison and Catherine Farrow, who are both renowned and successful geologists and both credited with significant base metal discoveries in the region. The common factor, of course, amongst all the people I've just mentioned is that they're all based in Sudbury and know the landscape and the local mines inside out. And so as a result, when we heard that this property package may be available, and this was back in 2017, we very quickly mobilized and executed the transaction as quickly as we could, and then kept the project moving forward as best we could with the limited funds that we had as a private company. Now, thankfully, investors slowly started creeping back into the nickel space last year, which subsequently helped us to continue to fund the company and the drill program in 2021. I actually don't think, and it's obviously a personal opinion, but I don't think you could put this property package together now. And if you could, it would probably cost you tens of millions of dollars. We benefited from knowing the Sudbury landscape, the strategic importance of a project with permits in this location, And frankly, in retrospect, I think what we really benefited from was executing this transaction at literally the bottom of the cycle. I mean, it wasn't really until earlier in 2021 that people started to wake up to the big increases in projected demand for nickel from these emerging battery technologies, which has subsequently helped us to go public and continue to raise capital and accelerate the development of Shakespeare and the exploration drilling that we're now doing.
Okay. So you mentioned a few initiatives that you've now started to execute since the RTO in May last year. Could you give us an update on what you have achieved? What you have achieved to date?
Yeah, absolutely. And as you say, it's been a reasonably short time frame. We completed the RTO in May and the listing on the TSXV, and concurrently at the time raised $7 million. Now, as I mentioned earlier, the company's actually been around since 2017, but the RTO and the capital raise was really the first significant capital injection into the company since inception, and it allowed us to really forward two initiatives mainly to narrow it down. They were, number one, accelerate the process of moving Shakespeare back into production, and number two, kick off the exploration program that we talked about, which started in June really, and since that time and over the last few months has now had some what we think are very encouraging results. The results that are getting us excited at the moment, very briefly, are in two broad categories. Again, they're drill results that support our thesis that the existing 21 million ton resource at Shakespeare can continue to grow. And for example, we put out some new results on that last week. And secondly, they're drill results from new exploration targets that we've known about for some time, quite frankly, but only really been drilling in the last 6 months since we've had some capital. These exploration targets we'd identified through a combination of geophysical work, electromagnetic surveys, and also our geological knowledge of the region. But it wasn't, as I said, it wasn't really until the RTO in May that we finally had access to the capital to start drilling them.
Yeah. So to have an opportunity to be conducting essentially grassroots exploration in the Sudbury camp really is something special. It sounds exciting given the caliber of discoveries there over the past century in itself. So perhaps give us some more color, please, about the regional discovery potential remaining on the property and regionally.
Yeah, absolutely. And you're absolutely right. Sudbury has a long storied track record of significant new base metal and particularly nickel discoveries. So we're certainly quite excited about of executing our new exploration program, and we have some pretty lofty objectives. To give you some more details, the drill program last year kicked off in May, as I mentioned, concurrent with the RTO, and we completed about 9,000 meters of drilling, and the successes can be characterized into the two areas I mentioned earlier: drilling around the Shakespeare mine itself, and then drilling at these new regional targets as well. Now, around the Shakespeare deposit itself, the old Shakespeare mine, the drilling around there has been what we think will represent potential extensions to the existing resource. So a particular interest were holes in what we call the gap zone, which is an area between our east and west zones that were previously thought to be barren. But our experience of Sudbury geology made us think otherwise, and we were delighted to report intersections in this gap zone, such as hole 25, which was back in the September timeframe, which reported about 52 meters at 0.46 nickel, 0.54 copper, and over a gram per ton of PGMs. And again, we reported some more similar holes with wide intersections from this area last week as well. So ultimately, we think that continued success in this, what I call the gap zone, could add tonnage and convert waste to ore, and ultimately reduce the strip ratio by enabling us to change the pit design, which would obviously bode extremely well for the economics of the mine. The second area, the regional exploration that we were talking about as well, the highlight of that is a brand new exploration target called P4, which is just 5 kilometers from the Shakespeare mine site itself, and obviously and potentially a future source of additional feed should we ultimately discover an ore body here. We originally identified a really prospective looking exploration target here last year using airborne and ground electromagnetics, and by the way, it's probably worth mentioning that EM techniques are a very useful tool in locating these sort of very typical Sudbury semi-massive and massive sulfide discoveries. Anyway, the first two holes we drilled into this exploration target reported semi-massive nickel and copper sulfides, which appear to be widening at depth. The deeper intersection of the two holes was about 0.45 nickel, 0.55 copper, and a gram per ton PGMs over about 3.6 meters. But what's also encouraging is that these intercepts are showing evidence of what you would call nickel and copper segregation and concentration, which is one of the key ingredients you look for when attempting to locate these Sudbury-style high-grade sulfide deposits. But I mean, I don't think it's too much of a stretch to say, because we're still a relatively unknown junior, the market really didn't sort of pay attention to the results. But we're obviously very keen to get back on the drill bit here at P4 and test the theory that we might have something pretty special. The good thing about the exploration plans for the new year that we're starting imminently are that we are fully funded to do that. We closed an additional flow-through financing of just over $3 million that will fund these programs, and as I say, we're kicking off the programs this week, actually.
That's very encouraging news. So you just mentioned that you just closed an additional financing. So I assume that you have some supportive shareholders. Could you give us an overview of the capital structure of the company and some of these supportive shareholders?
Yeah, absolutely. And you're absolutely right about that. And it's certainly something which we're very proud of and working to our benefit. The Magna's extremely tightly held, and over 30% of the stock is still in the hands of management and insiders. So I think it's fair to argue that as management, obviously, we're extremely well aligned with our other shareholders. For the RTO and the subsequent flow-through financing, we were fortunate enough to catch the attention of John Goodman and Dundee Corporation, who, as many people will know, have a long track record of successful Sudbury investments, and I think immediately recognised the strategic importance of our location and our permits, along with the exploration potential of our assets. So John's group is now a 19% shareholder, which I think probably entitles us to argue and claim, at least, that we have genuinely long-term supportive shareholders with deep pockets and, just as importantly, considerable expertise in the region as well.
No, absolutely. Right there, as you say, you need long-term supportive and deep-pocketed investors to be able to execute your long-term growth strategy in the junior mining world. On that note, could we perhaps finish off with an overview of how you intend to execute your growth strategy at Magna Mining in the coming 12 months?
Yeah, absolutely. I'll do my best to distill this down. It's our growth strategy is multifaceted, and we're obviously very excited by it. And I suppose if you were to distill it, it would be in three groups. The first of which would be to have exploration success and obviously resource growth. The second would be to continue to move Shakespeare into production. And the third group would be for new acquisitions. So I'll try and quickly describe all three of those. The first one's reasonably simple: that the exploration success and resource growth. Obviously, I've talked about this already, and obviously part of our strategy is related to growth through the drill bit at both Shakespeare and the surrounding exploration targets. And again, we're funded to start executing that this year now. The second growth strategy of advancing Shakespeare towards production. Over the next 12 months, we're expecting to make some significant progress in basically outlining when and how Shakespeare could go back into production. The most immediate objective in pursuit of this is likely to be the feasibility study update that we'll publish in the first quarter of this year, so at some point in the next month or two. This is a base case feasibility that will be compliant with the current permits and the closure plan. And we're also going to be looking at the possibility of potentially also producing via toll milling using Glencore or Vale's mill in Sudbury, which which also we'll hope to make some progress with next year. So moving Shakespeare towards development will incorporate looking at building our own mill via the feasibility study, and also looking at potentially doing it via toll milling through Glencore or Vale. And the third growth strategy is what you would call new acquisitions, and this could be potentially transformative, but it's also the hardest one to quantify. And the most important thing to say here, I think, is that our Sudbury-based operational and geological expertise means that we're very aware of other assets in Sudbury which are, for example, currently underutilized or even lying dormant, in some cases past producing mines. And we think that access to a new mill such as Shakespeare in the Sudbury region would mean that some of these assets would suddenly become extremely economic and be hugely material to Magna Mining. And there are, make no mistake about it, there are plenty of these exciting nickel assets left in Sudbury, ranging from greenfield exploration all the way through to, as I said, past producing high-grade underground mine. And we think we're uniquely positioned to exploit and develop these kind of assets because obviously we have permits and an advanced stage project which we could use to process additional high-grade ore. I mean, there's absolutely no question that many juniors and exploration teams would love to work on these sort of assets in Sudbury and explore for high-grade deposits, but they'll ultimately be faced with the obstacle of not having access to their own mill for a very long time, if indeed at all. So, and by the way, the other thing to note on the acquisition strategy is that this whole acquisition and consolidation strategy is something that FNX had incredible success with during the last nickel cycle. So there's certainly a precedent for doing this in Sudbury. So I suppose in summary, we think we're uniquely positioned in one of the richest nickel producing regions of the world with these three growth strategies, which are continuing the development of Shakespeare, new exploration success, and then new acquisitions. I mean, in terms of the impact of acquisitions as well, for example, if adding as little as, say, 1 million tons of high-grade ore into the mine at Shakespeare would dramatically improve the economics. And of course, that might be something we could achieve via exploration success or successful acquisition strategy.
Right. All right. That's all we have time for today. That was Paul Fowler, Magna Mining's Senior Vice President.